The bourse is about 2% of its 2010 high, which was struck in early August. Are the markets here poised for a push on, in your view?
Basically, Alishia, I think we may see more activity in the market. We are seeing slight gains on a few counters. Particularly, we saw breweries last week. We saw it move about 2 million shares, about 185. So there's a bit of demand coming in for these particular counters. Yesterday, we saw some of the counters are picking up, like what Kenyan actually went up, hit its 12-month high, up to levels of about 19 yesterday. A lot of heavy trading happened yesterday between 18 and 18.50. We also saw a bit of activity on KCB. Basically, yesterday, a lot of foreign activity coming in also on KCB, hitting highs of about 19.50. So definitely, we're actually poised to see a lot of price peaks in the coming week.
Yeah, of course, KCB has bagged that 12.5 billion shillings of rights issue, Tier 1 capital, and is leapfrogged with respect to, to the capital curve as well. The price was sold excessively on a perceived supply of new shares. It's sitting at a trailing PE of 12 at this stage. What are you making of current valuations? Would you be a buyer?
At those levels, actually, I would be a buyer of KCB. Looking at their books and actually the amount of money they received from the rights issue, we're actually seeing the bank actually growing. Looking at how much money they raked in last year, particularly from the operations in Sudan, they actually did quite well last year for them. So definitely, for me, I see them actually increasing in terms of earnings and in terms of profits actually for the next financial year. Looking across the board for the banking sector, it's actually been a fantastic year for them. We're actually seeing growth in terms of profits from 30 to about 50% increase in profits. So definitely, I think KCB still has room for improvement, room for an upside growth in terms of share price. So definitely, I think it's still a buy compared by the heavy demand which you're seeing, not only from the local investors, but also from a few foreign investors that are coming in.
How does Standard Chartered in your book stack up against the likes of a KCB? Because we know Standard Chartered is amidst its rights offer as well. It's looking to be fully subscribed, but it also has been one of the most conservative banks amongst the big cap players.
You see, banks like Standard Chartered actually have created a niche. There's a niche market that they actually target. They're not looking. We don't see them actually doing a lot of extensive retail marketing on their side. They actually target a certain niche of the market, which we're looking at mostly corporate and high net worth clients for them. Basically, the money they're trying to raise now is actually extending part of their business, planning to take over Barclays custodial services. I think they're looking at how much income they actually make apart from the normal banking services that they offer. Obviously, once they get in the custodial business, all these transactions that are happening in the stock market right now, with most of the foreigners actually having their custody business under Barclays. The forex side, they actually be looking at making a lot of money from it. Definitely, we may see an oversubscription on the share. One thing we're actually also seeing is that there's a lot of demand for the stock. We're actually seeing trading at levels of about 270. Yesterday we saw it maybe move up to about 300 shillings. Definitely there's a lot of demand for the particular stock, not only from local institutional investors, but also from foreign guys. Yeah. So definitely we may see the price actually setting at these particular levels. And at 165 and 45 cents, which is actually a discount. A huge discount compared to where the price is trading at the moment. So definitely, and we've seen the rights actually were trading at levels about what 80, 70 shillings, which is a better discount for the investors.
Amos, outside of the banking arena, I mean, demand has been driving quite a few of these counters to new highs. East African Breweries on Friday closing at a 27-month high of 198 shillings, and through this week also continuing to progress higher. Lots of foreign interest being directed towards this counter. Is it a major issue, is liquidity the major driver here?
No, it's not. The major issue here is not liquidity. We're actually seeing a bit of supply definitely on this counter. But then again, there is demand for the counter. That's why you're actually seeing the stock has been holding at levels of about 184, 185 for the past 2-3 weeks. definitely people are looking at stable income. We know the dividend yield is always stable for the company. And actually looking at, in terms of growth for the company itself, they commissioned a new plant. They actually expanded into the fortified wines business. So definitely we're actually seeing increased earnings for the company. That's why you're actually seeing the price being stable at these levels. Supply is coming, but equally demand actually meets the supply in the market. So definitely we actually see the price hold at these levels at the moment.